Selina, let's start with what surprised investors the most.
So the minute the earnings were announced, we saw a huge drop in the share price, and that was largely because of this earnings per share miss that you had just mentioned. And a big reason for that was because of a big tax hit. The effective tax rate went up quite significantly, and investors later then pared back the losses in the share price because I don't think the concerns over this tax hike was too serious. It was because of an investment they had made in Suning, and that a tax break had since expired. Another area of potential concern, though, is pressure on the margins. Alibaba's core e-commerce business is still growing quickly, but they are rapidly expanding outside of retail into areas like cloud and entertainment, and that is putting pressures on margins. But there was a lot of hope and a lot of bright spots in terms of growth in that revenue core e-commerce retail number. It shows that they're able to squeeze more dollars from these brands by getting better content, targeting users much better.
What kind of progress are we seeing in these new areas like cloud, like media?
So we continue to see triple-digit growth in these areas, and we continue to see very large losses as well. In the cloud business, there were still losses, even though some investors had been hoping that they would get to at least break even at this point. And part of the reason for that is because there is very strong competition in the cloud space from Amazon Web Services, from Tencent. And so they've had to continually cut prices in order to gain market share. Now, in the entertainment business, it's similarly a very cutthroat space. Tencent has been rapidly acquiring content, as has Baidu, and Joe Tsai on the call even said that, it's a very hot market right now, and hopefully the prices will come down over time as this market starts to neutralize a little bit. But right now they're having to spend very rapidly for content.
What are the macro drivers helping Alibaba?
So Alibaba is able to benefit from the growing Chinese middle class. Even though we did see some industrial numbers come in on the weaker side in April, the Chinese consumption has stayed very strong. And Alibaba has also been able to capitalize on the rural population, which is still a very untapped part of the Chinese market. In the rural areas, there is not very good access to offline retail. Therefore, online retail provides a very important pathway to get a lot of goods and services that weren't available before. And also, Alibaba has made big investments in offline retail and that shift to mobile, so they're trying to kind of bridge the difference between online and offline retail.